What's going on, guys? It's Justin Fernio from Push and Profit, and in this video I'm going to provide my technical analysis on JP Morgan stock along with why I have an overall bearish sentiment on the financial sector. Now, I want to start this video off by talking about JP Morgan Chase Q1 earnings. Now, it's no surprise that with the overall pandemic taking place, financial markets have crashed quite terribly as normal activities have stifled quite a bit. With that being said, JP Morgan Chase, which is the largest bank in America, has recently released a report that was pretty disappointing to long-term investors. The figures showed that the bank earnings were far less than what the general market estimated, with JP Morgan showing a profit of 2.87 billion for the first quarter. Now, obviously, 2.87 billion is a lot of money, or actually anything with the word billion at the end of it is a lot of money. But when you compare the first quarter figures of 2020 to the 9.18 billion from the first quarter one in 2019, it shows a 69% crash from the last year. Now, I know in a couple of seconds I just mentioned a bunch of numbers which could be kind of confusing, so I kind of want to explain why the JP Morgan Chase reports reflected such poor performance. Now, pretty much all the banks, because of the pandemic, aren't getting a lot of business, but on top of that, because the Federal Reserve has lowered interest rates. Now, what does that mean? When the Federal Reserve lowers interest rates, banks can no longer make such large profits because they cannot charge large interest rates on their loans, hence them making much less money, which is reflected on their Q1 reports. Now, in my opinion, and this is my opinion, of course, I don't think the Q1 reports are as bad as what I believe the Q2 reports are going to be. And that is because it looks like this pandemic is going to stretch for a longer period of time, which is going to lead to much more of an economic impact on the financial sector. Now, at the beginning of this video, I did mention I'm going to provide my technical analysis on JP Morgan stock. So let's go ahead and hop into my computer. Let's take a look so we could further talk about this more. Alright, so now we're officially in my computer screen. Right now we're looking at JPM, which is a ticker symbol for JP Morgan Chase and Company. You can see recently after the large sell-off, Chase has been kind of recovering. However, there are a few points or key things that I want to talk about. For example, right, first of all, let's just start off from the beginning right here. At the high peak before this whole pandemic, Chase was at an all-time high of $145 per share, right? Then, they hit a low of $76 per share, right? So this drop right here was an initial drop of approximately, and we're going to say 46%, right? So that was a drop of 46%. Then, however, from the low, after that major drop, and looking into where it's recovered at the peak, it recovered about 26%, right? However, something that I think we got to take a look at is look at the SMA line, which is a simple moving average. You can see that this is, Chase is kind of having a resistance towards it, where it's not really breaking above it. So this kind of shows signs that Chase stock does have the potential to continue going downwards, after, not, breaking the threshold of this SMA thing. Now, again, not entirely true. We could see it, however, bounce back. But, I mean, if we're looking at what's already happening, you could see it touched the line, broke above it a little bit. However, it has been kind of touching it, falling below and lower, right? So that's the first thing. So, yeah, it's recovered a bit, but not fully, or not as quite as the entire, again, that was approximately like 46% that it fell down. Now, something I also want to show you guys is what Chase did back in 2008, right? And this is important. So we're going to kind of like scroll in and zoom in right over here. So this is 2008, the last financial crisis that we were in. Now, Chase was at an all-time high, or it had a peak of $49.80 per share, and then it fell down to about $29.27 per share, right? And this drop right here was initially a drop of 41%, right? So you can see that after it sold off, it did show signs of a recovery, much like what we're seeing right now, where it ended up kind of reaching exactly where it was at the peak in 2008, and then it had another sell-off, just selling off even like almost twice as much as it did right after, right? Now, again, this sell-off was approximately a sell-off of essentially 70%, right? We're just gonna say 70%, right? Just to round it up. Starting from the first drop, that was only 41%. So it almost doubled its drop, right? And then it didn't recover until, let's see, the first drop was around the fourth month of the year, and it didn't kind of hit the same area until maybe 10 months in. So about 6 months in, it took for Chase to entirely recover. And, after that, kind of, had a lot of consolidation moving sideways. And, the stock market took its time and its course and started, kind of having this bull market rally that we were grateful to have from 2008 to 2020, right? So now kind of, zooming back into like the 180-day chart. Again, yeah, I just want people to be cautious that, we could kind of see what happened in 2008 repeat itself, where, a major sell-off happens, we start seeing signs of an uptrend, and then boom, another sell-off, which could be even worse, happens. And again, I'm looking at the technical point of view from it. It is looking like it touched the SMA line, and it is going to start coming back down. Looking at it from just economic view, we are still in this pandemic. We still haven't seen the full ramifications of what this pandemic is going to do. So, this is why I have a bearish sentiment of what JP Morgan Chase is going to do, or actually the overall financial sector, right? Now, let's take a look at the Russell 1000 RGS financial index, right? Now, this is an index that pretty much tracks the whole entire financial sector. And we're going to kind of see the same thing that we see with Chase in reality, where, it had a major sell-off, and this is recently, 2020, it had a major sell-off. It started bouncing back, showing signs of a recovery. However, it's been kind of looking like it's going to stifle right here and it possibly just continue going down. And again, we see the same pattern if we look at, the 2008 last financial crisis with the overall Russell 1000 RGS index. So let me just go ahead and try to zoom in to see if I could find 2008, and I believe it's around here. Again, you could see that, things sold off, started recovering, and having a major sell-off. So, the reason I point this out is not to really just cause fear, just kind of to bring more awareness to anyone that's either a long-term investor, anyone that swing trades. Of course, with me, I am a day trader, so in reality, I don't really care if the market goes up. I don't really care if the market goes down, because my goal is just go take intraday plays and writing it both ways. I make profits whether the market's going down. I make profits whether the market is going up. For example, if we look at this ETF, FAZ, which is the bear ETF of the financial sector, we could see that it started pushing up today, meaning the bull version of the ETF was selling off. So me as a day trader, if things are going down, I play the opposite, right? And you could play the opposite in multiple different ways. You could either short it, you could play like a reverse ETF, things like that. There's multiple ways to play it. Like, again, like I said, as a day trader, I'm not really looking at the overall large photo or large view of the market. Even though things are selling off, I'll either short it or I'll play the opposite reverse role of the market. Again, I don't care if things go up or things go down. Now, hopefully this video was able to show you guys what's kind of going on right now, show you guys a pattern between this financial crisis and the financial crisis that occurred in 2008, and pretty much just informs, bring some awareness to you guys. Now, if you guys have any questions, you know where to go. Leave them down in the comment section below. I do want to point out that I have a free Facebook group for, in reality, people who are into trading, people who are into investing, people who are into entrepreneurship. I am building a community of like-minded individuals. So if you're interested in that, then take a look for the link down below. It's going to be one of the first links below in the description box. Also, make sure to subscribe to the channel, hit that like button if I haven't said so already, and maybe consider following me on Instagram. I do post on my story quite frequently about my day trades, my recaps, how much I made for the day. So if you're interested in following me, then make sure to follow me on all platforms. With that being said, I hope everyone's being safe. I hope everyone is managing their risks accordingly, and I hope everyone has a great rest of their day. Peace.
Economic